Hello again, everyone. Welcome to the weekly analysis review, where I look at the upcoming week and look at what to expect based on historical trends and what the market did on the previous week. So before we begin, let's just pray as usual. God, we just thank you again for your blessing and for your goodness towards us. Thank you for this opportunity to trade and to share insights. We pray in a special way for anyone watching this video. May it be beneficial to them, and also may we continue to improve and to become the ultimate traders. Thank you. We pray. Amen. All right, guys. So let me just get right into it. Last week, you will see, based on those of you who actually watched the video for last week, you will see exactly what played out on the market. The market did exactly what I spoke about earlier in the video that I posted, where you saw that early week retracement leading into the final week trend move of the NASDAQ instrument. So I'm going to go ahead and share my screen and we'll get right into it. Now, last week, and we'll just do a quick review. Last week, you'll see the market actually started off with this first lower high move here, going down all the way to a lower low. Okay, this was Monday, Tuesday, Wednesday. And that's the purpose for me actually drawing these lines. They're very helpful to me because I'm able to actually break down what the market is doing in that 24-hour window in the different sessions. I'm able to track what it's doing in London session as opposed to Asian session, and I'm able to spot trends easier. So that's one of the reasons why I do that. The other thing that I want to actually stress on and to remind everyone watching this video, when you do your analysis, you always want to start with your biggest time frame and work your way down. So let's say, for example, I'm coming on for the first time this week, and my first time frame that I decide to do my analysis on is my 1 hour time frame. Okay, now I'm on my 1 hour time frame. You'll see that it's making a series of lower highs, lows. It's doing a bit of consolidation. But let's say I looked at this and I see, yes, it's making lower highs, lower lows. The danger with this is what you see on your smaller time frames, okay, it's not the true picture. That usually sets up the trend move for the bigger time frame. Now, let me break that down for you. NAS100 has been a historically bullish instrument. What I mean by that, it's been making consistently higher lows, higher highs, higher lows, higher highs. Okay, since 2003, that's what it has been doing. Let's check. So if I go to my biggest time frame, which is my monthly, okay, this is when the first time AUBER started registering data for the NAS100. 2003, higher lows, higher highs ever since. Okay, all right. So when you look at this time frame, let's say the smallest time frame I'm working with is the weekly. And I look at my weekly and I see here that my weekly was making lower highs, lower lows. Okay. The danger with thinking that this is going to be the trend move, okay, is that the smaller time frame needs to make lower highs, lower lows in order to fulfill a higher low on your bigger time frame. All right, so let's check this. So let's say, for example, when I came in at this point in time, I didn't have the benefit of this data. So let's do a back test. Okay, so let's say this is where I came in on this particular, on the market. Okay, and I see lower highs, lower lows here. And I say, yes, this market, it's making lower highs, lower lows. It's going to come down back to this support area. Okay, that was my analysis. The danger with that is, excuse me, because this move right here, and I'm going to mark it, this move right here, although it says lower high, lower lows in this sequence right here, lower highs, lower lows, the danger with this is I did not check my bigger time frame to see what it was making on the bigger time frame. Okay, so let's go right now. So I go on my bigger time frame. See this point that I marked right here, it is in fact a higher low on my biggest time frame. Okay, so that is the reason why you actually want to start with your bigger time frame and work your way down. All right. So that's just for context right there. So although it was a lower high, lower low on my weekly time frame right here, it was only a higher low on my biggest time frame. So this market is still in trend. Okay. And look exactly at what it did. Let me just go down to the weekly real quick and show you. So you may say, okay, fine, I'm trading lower highs, lower lows. All right. Well, here's the thing. If you're trading lower highs, lower lows, okay, you definitely could not come in for a sell right here because the market is in fact at a low. So you either would have to be waiting to see what type of high is going to be made, or you would go in for a buy right here. So this is exactly what happened. So you went here. Notice price pushed up, pushed up. So even if you came in at this point, right, you'd have made profit up to this point right here at this lower high point, okay, for the buy. So if you said, okay, fine, you know what, I am trading for the lower highs, lower lows, but you came in at this point, it would be a good trade all the way up to this lower high point. All right. But notice what the market actually did. It actually continued going all the way up. You had some retracements, you had a lot of consolidation, but remember, this is your weekly. Look at what price actually did. It just continued pushing all the way up. All right. All right. So that is what I want to actually clarify as it relates to that point on the bigger time frames. So looking again at last week, this is what we saw happening here. Lower highs, lower lows. Okay. That was the first part of the week, Monday, Tuesday, Wednesday. After Wednesday, it actually took that buy all the way up to make a new high. And it made a higher low, a higher high on Friday before actually starting to come back down again, which we will discuss in this week's video. All right. So that was it for last week. Now, I actually want to show you what prompted my decision on Friday for taking that sell, okay, to show you what I actually used to actually analyze to decide that I was going to take that sell up on that point, up until that point in time where I exited just before market close on Friday. So for that, I'm going to bring up the screen for last week and I'll show it to you. So for example, now remember, I mentioned to you that I do not use my small time frames to do any kind of analysis. What I do is I use it to actually gauge my entries. Now, this was Friday's move. So this is what happened on Thursday evening. Thursday evening at, Thursday morning at 9:30 a.m., all right, when the market opened, this is what the market actually did, okay? It came down here and it made this low, all right? Now, if you notice, it actually continued buying. It made higher lows, higher highs, higher lows, higher highs, until it broke this first structure right here to create this new low. All right. Now, what I did at that point in time was, if you notice, I drew a trend line from this low to this low, which indicated that the market was in fact making those higher lows, higher highs. All right. At this trend line, look at what the price did. It broke through this trend line and it made this higher low right here. All right. This is the first indication that the market is actually trying to break the current structure that it's on. All right. Now, notice at this point also, when it did that, there is a level of resistance that has been seen right here. Okay. Right throughout. This is from the close on Thursday right through up until London session. If you notice, price kept coming up every single time at this resistance area and trying to go back down. So this is my trend line that got broken. Okay. This is the resistance line that keeps getting tested, which tells me that the price is about to actually sell. Okay. So it's just about a matter of time before you actually go in and take that sell. Now, if you notice what I did also at this trend line right here, I actually drew this triangle right here, which would actually become my sell zone, which is below my trend line. So anything in this region right here is fair game for me to sell. So if I came in here and it came to this higher low, this zag point, I'd be in profit. It came back up to this zig point, I'm barely in the negative. Came back down to this zag point in profit. Came back up to this zig point. Guess what? Barely, it's right back at my entry. Okay, so I'm barely in the red. Came back down, I'm in profit. Came back up, breaking even before it came down and dropped right here. All right. Now, notice also at this point in time, this created that zag point on the 1 hour, which I ignored. I actually did not take the exit on that zag point. Why? Because I realized that all time frames were at highs or higher highs or lower highs. They were at some type of high. So I knew the market was about to sell. So any kind of buying that would happen, okay, would just be a retracement, and I would just have to sit patient before the move actually came back and went in my favor. So let's mark this point right here. So we see right here at this point, we have a lower low on my 15 minutes. So let's mark that point right here. Okay. Now at this point, this here is 4:25 a.m. Okay, 4:25 a.m. Now, when you actually look at your bigger time frame, so let's say, for example, I look at my 1 hour time frame. Yes, here we go. Remember I was talking to you about every time the market makes a zig, it makes a zag. Okay, it's coming from this zig point. Okay, we entered this trade from the previous day, which was Thursday. So we had that sell. It came right here and it made this zig point right here. Sorry, yeah, this zag point. I didn't exit here. Why? Because I'm trading from highs to lows. So I'm really waiting for my lows before I actually get into the that trade. Okay. So although it made this zig point, this zag point right here, I didn't exit because I really wanted my lows. I know that's where the move would end. However, look at what it did. From this zag point, it came up and it made another zig. That's why I said every time the market makes a zig, it makes a zag. Every time it makes a zag, it makes a zig. Okay. So when it came all the way up here, notice this was my sell zone. So everything right here was valid. Sell point, this is where I should have exited, but I didn't. I said, you know what? I'm trading for my lows. Market opened, it came up, it did this retracement. Okay, I'm not worried about it because it can't go much higher than a higher high. It can't. Okay, so the market needs to come down to make that low. Look at what happened. It came up 9:30 into 10 o'clock, going into 11. Price actually finally settled down before it actually started to go in the direction where you wanted it to go. I exited the trade on Friday evening because I didn't want to hold it over the weekend to get any swaps or, you know, to get those weekend charges. So I exited. All right. Coming up for this new week, I'll start to look for new entries in order for me to take that sell. All right. So with this trade, came up in retracement. I think it retraced like about 900 pips. You know, put me 900 pips in the hole, but it's okay. Where I exited was 1,800 pips. So that was still a good trade for me to actually come out on. All right. That is the point that I want to make to you where I say every zig makes a zag and every zag makes a zig. 1 second, please. All right, sorry about that. So one quick thing on the zigzag theory as I switch the screens. Remember, the premise of the zigzag theory is every time the market makes a zig, it makes a zag. Every time it makes a zag, it makes a zig. Let's prove it. Here we go. We're looking at the 1 hour for last week. Okay. Market opened when the market ended with a zag point on Friday. All right, which is it sells to a zag point. Okay, this is your zag point. Look at what it did. It came up, it made a zig. The zig is only a lower high, but it's still a zig point. If you entered right here and exited right here, you would have been in profit. Okay, it made that zig point. Guess what? It has to make a zag point. It came down, boom. That's your big zag point of the week. It made that zag point. Guess what? It has to make a zig. Came up, boom. Here goes your zig. It's at a zig point. It must make a zag point before continuing. Now, if you notice, even although the market is here and it's making higher lows, higher highs, it's at this high point. In order for it to make a higher high, the market has to make a higher low. You can never, ever, ever get a higher high on the market before getting a higher low. It will never happen. You cannot get a higher high before you get a higher low. Anytime. Let's check it. Don't believe me? Here's a higher high point. Before this higher high, there was a higher low. Okay, let's look for another one. Here's a higher high. Before this higher high, you had a higher low. Every single time you have a higher high, you must have a higher low. Here you go. All right. So if the market is in fact making higher highs, higher lows, higher highs, sorry, and it's at an overbought high or it's at any type of high, if it is making higher lows, higher highs, you must get that zag point, which is going to be your higher low, before it can finish with that higher high. So that is one of the reasons why I say every time the market makes a zig, it makes a zag. Every time it makes a zig, it makes a zag. Right now, you're at a zag. The market needs to make a zig. However, key point, not because you see the signal comes up and say, oh, it's at a low point, it means it's just going to go right up and make that zig point that you're waiting for. You have to wait for your confirmations. You have to be able to see how everything is played out on the time frames before you actually just take the trades. And that is one of the reasons why I will say to you, any indicator that you use, do not use it as a predictor. Indicators are there to show you what's happening in the market, to help you to make that informed decision, and to also use the additional tools to get those confirmations that you need before you actually take the trade. Okay, so when the market opens, I'm not just going to be running in blindly and saying, okay, fine, yeah, I'm going to be taking a buy. No, I got to wait. I have 5 days with which to trade. Okay, you only need to make 100% on your account every single week. It's very easy to do, very simple to do. It just requires patience. All right. So with that being said, let's go into what we're expecting for this week. Now, if you look at what happened last week, you'll see it's very similar to what we're seeing here on happening last Friday. Okay, I mean yesterday, Friday. Last Friday, market did a similar move. It came up, it made that higher high at some point before coming down to starting this low process right here. Very similar move. It ended with on Friday. Look at what the market did when it opened. Okay. Again, you cannot sell from a low point. You need to sell from a high point. So market retraced. It came up. Remember, last week was a shortened trading day. So it actually didn't go, the market actually closed at 1 p.m. last week. So you actually didn't get that full amount of hours that you'd normally get. However, you still got that lower high before it actually sold and came down to make that lower low. All right. Now, again, what we're expecting, if you use the simple concept of the zigzag theory, it's very simple. The market makes a zig, it makes a zag. Market makes a zag, it makes a zig. Which means price ended here on Friday at a zag point. Okay? So zig, zag. If I want to sell this market, okay, I don't want to just jump in as soon as the market opens and go for a sell point. Remember, You sell from your zig points. So the market goes up, it makes that zig, perfect opportunity for you to sell. Okay? So zig, zag. It's now at a zag point. If I'm going to be selling, I don't necessarily want to sell from here. I want to wait for some sort of retracement before I go in for the sell. Remember, you cannot sell from lows. You have to sell from a type of high. It's a very simple concept. All right. So when the market opens, I'm waiting to see exactly what happens. Now, if it drops and goes all the way down, well, you know what? I would have missed that move. I'm just going to wait. I need to wait to make sure that that move is completed before I actually decide to go in for my trades. All right. The other thing that I want to actually show you real quick is just, you know, going off of the simple zigzag theory, you know, how it's basically impossible for you to actually lose your trades if you trade it correctly. Okay. Now, my zig points and my zag points. Now, remember, I said in previous videos that when I'm entering my trades, if I'm going in for a sell, I usually like to go in on my highs or my higher highs for sells, or for my buys, I need to go in on my lows or my lower lows. Okay, so let's prove that. So we're looking at the 1 hour. So let's say, for example, 1 hour came up here and it made this you know, zig point. Okay, I don't know why. If I'm going for a buy, I cannot enter right here. I don't want to enter right here, because if I do, guess what? I have to deal with this retracement. It came back up, it put me in profits here. However, if I just waited for this higher low, then I would get more profit. That is it. Price is at a higher high. I come in on this higher high. I'm going for a sell. Guess what? Price comes down all the way down here. I have all of that room to play with. Price is at a low. Okay, you're going in for that high. Price is at a low. Look at what happens. It comes up, makes that zig point. Okay, but guess what? Because I want to sell and I'm selling for my highs or my higher highs, I'm not going to exit right here. I'm just going to sit down and wait, because this is not a high point. So I know that this move is not over. So price retraced, it's a higher low. Came up, it's a higher high. Now I can exit if I'm not sure. Okay, now look at what price did. Zag, then it did a zig. Zag, zig, zag. Yeah, so it's a very simple concept, guys. It just requires some amount of practice. You won't get it right on the first time, but the more you practice is the more you're going to see things open up to you on the markets. All right, so going into this week, this is where the price ended on Friday. Okay, what am I looking at for this week? Well, for starters, we start from the biggest time frame on my monthly, and I'll just reset this. Again, we know it's making higher lows, higher highs. So in the back of my mind, right, I know that my bias is going to be overall bullish. It doesn't mean that sells do not exist in the market, but they have to be timed properly. You have to know your exit points, okay? And as soon as you get your exit points, the correct exit points, and all conditions exist, then you go for the trend buy. All right. So monthly is at a higher high. We go down to the weekly. Weekly is also at a higher high. The daily actually just completed a higher high on Friday, which is good. Okay. Next time frame down is your 4 hour. 4 hour is actually, in fact, at a high. Okay. When you look at your 1 hour, you'll see that your 1 hour is actually at a low point. Now, number of things to look at. When you look at this, you want to actually understand that you want to make sure that you are entering your sells when each of your time frame is in fact at a high position. Now, coming down from the monthly, you'll see everything is sitting at a high or a higher high. When you get to your, let's say on your 2 hour, you'll notice that your 2 hour is in fact at a higher low. All right, so this is the first time frame that is in fact at a higher low, your 2 hour. Okay. Now, what that means for me is that in order for me to sell and to sell properly, I want to make sure that I have that time frame in the correct position that I need it to be in. So I need my 2 hour to either say to me a lower high or a higher high or a high in order for me to sell. All right. So basically, I know that there's some amount of buying that is going to need to take place before I'm going to continue with my sales. All right. Because the 2 hours out of place. It's at a higher low. So remember, it's coming from this lower low. The trend move is lower low, high, higher low, higher high. That's what we're expecting. Are we going to get that? That remains to be seen. So that is one of the reasons why in the first part of the week when the market just opens, you want to make sure that you are waiting to see how the market actually plays out before you actually start taking those moves. All right. So this is what I'm looking for. The first thing I'm looking for, I need to see what type of high the 2 hour makes, or if it's going to actually continue pushing down to actually come all the way back down here and to break this previous lower low, which it can do. That's one of the reasons why you got to wait. Okay. All right. So you're looking at your 1 hour again. And here we go. We see that the 1 hour did in fact come down. It broke this higher low right here to form a new direct low on Friday. It tried to buy up, but it got resistance again, and then it actually continued selling. All right. Now, so my first order of business when the market opens is that I need to see what type of highs are created before I actually think about selling. I'm not just going to jump in right here and say, okay, fine, I'm just going to go straight in for the sell. I'm really looking to see what I'm looking for. I need to see those confirmations before I actually take the sells. Excuse me. One thing that is encouraging is the fact that on my bigger time frames, like my daily, my weekly, and my monthly, are coming from higher highs. Okay, so I know that there's some amount of selling that needs to take place before I actually think of buying again. The other thing that you want to also bear in mind too is that the monthly candle is coming to an end in about 3 days, 3 trading days. All right. So remember, this is the 24th of February. The monthly candle is going to be finishing shortly on the 29th because this year is a leap year actually. All right. So you want to bear that in mind. There's no rush to jump into the trades or anything like that. You just need to be patient. So first things first, I see my 2 hour is at a higher low. Okay. It can either go up to create a higher high, or it can continue pushing down to create that low. So you have to be patient. Now, so you're on your 1 hour. This is what you're seeing. Now, again, as I told you, I don't like doing analysis on my small time frames. I use my small time frames to actually give me the entries that I'm looking for, because the smaller time frames have a lot of noise and they will confuse the crap out of you. So you make your decision based on your biggest time frames and you use your smaller time frames to execute your trade. Right now, as it stands, my bigger time frames from my monthly are coming down from higher highs. I need to see a higher low before another higher high is in place. Currently, I'm seeing that higher low on my 2 hour. It expired on Friday, Okay, I need to see exactly what is going to be transpiring, what is going to be happening come market open. Back to last week, you see here what happened. Price came down, it made this low, which is where it ended on Friday. Okay, and then it continued to go down to create that lower low. But let's double check something. Remember, Friday finished the same way as the previous Friday. All right, so let's use the backtest tool. So if we go here, that's where the market ended on Friday. Now, we want to see how that played out on the 2-hour. 2-hour at that point in time was in fact at a low. Okay, that's the difference. The 2-hour actually finished with a low last week, Friday. This week, it finished at a higher high. Sorry, it finished at a higher low this week. And remember, the trend move is lower low to high, then higher low to higher high. All right, so that's important. All right, let's X out of this and we look at your 2-hour again. 2-hour this week, instead of finishing with a low on Friday, it finished with a higher low. So this clearly tells you that, guess what? You know what? My 2-hour does in fact want to finish that higher high. Will it finish it? That remains to be seen. That is even more reason for you to be patient and to watch exactly what the market is going to do. So for this week, again, we see the trend is still continuing to make higher lows, higher highs. However, all time frames finished at highs or higher highs. Coming down to the 2-hour, it finished at a higher low, which tells you it's still in trend. It did not break as it did last week. Okay, it is in fact coming from a true higher high. This was an all-time high made on Friday. It only came down to make a higher low. Remember, the trend move is higher lows, higher highs. That is the trend move. So it's going to be very important to see what is going to happen. But one thing I will tell you, the market is still in that higher low, higher high trend until it breaks. That's the trend that you trade. Based on your bigger time frame, higher lows, higher highs. Okay? All right. So when the market opens tomorrow, as I keep repeating myself and saying, it is not important or imperative for me to actually try to get the first move. There is no rush on it. Just be patient. Watch to see what the market does. Remember, Mondays, Tuesdays, Wednesdays, the market takes its time to sort itself out. Just be patient. You have to wait and you have to see exactly what the market is doing before taking that first move. What we know, 2-hour finished at a higher low. Will this week get retested? There is a strong possibility of that happening. Will it shoot up? It can also happen because remember, the market is at a low point. Candles finished on Friday. Everything expired at Friday at 4 p.m. Sorry, at 5 p.m. So which means in order for the market to sell, it needs to make some sort of high. It will not sell from a low point, okay? But at the same time, you have to understand that when the market opens, it can continue to shoot down as well as it can shoot up. But there's no rush to jump into that trade. So I hope that this video will actually help you to see the analysis or to see what the market is currently doing. One thing I want to point out to you is that up until Friday, yesterday, The market for 2 weeks was actually consolidating between this low and this high on my 4-hour. On Friday, it actually broke this high point, I think with the 9 o'clock candle. Yes, 9 o'clock candle on Friday, broke, left a wick up here, but this was the first time it actually broke out of this zone in the past 2 weeks. Okay, so it's important for you to be patient and to see what the market is doing. Right now, we know that the 4-hour is at a high point. We know that. It has to sell at some point in time. However, the 2-hour is telling you that it's at a higher low. Will it continue to go down to complete this low? Or will it come up to make a higher high before it sells again? You have all of Monday to see that. You have Tuesday, you have Wednesday. But trust me, when you wait, the bigger moves will come. Just look at your 1-hour for last week, right? You basically had 3 trades that you could have taken. Here you go. This is a zig. Zag, that's one move. Okay, right here, I think this was like 3,000 something pips. All right, yeah. 4,000, but let's say 3,000. Let's say you didn't catch it all the way up here, but the entire move was 4,000 pips. All right, that's trade number 1. Trade number 2, from this lower low here on Wednesday, all the way up here. All right, it's about 7,000 pips. Let's say 6,000 pips if you didn't catch the entire move. 7,000 pips. All right, that's one trade. It's at a high. Guess what? So took this trade like I did. It's like 700 pips right there. That's another exit for you. But let's say you missed these 2 exits. Let's say you took this buy from here, came back down, retraced, ended with that higher high. Nice trade. So if you took that move all the way from here, from this line all the way up here, is about 8,000 pips or so. 7,600 pips. Okay, and then get in for the sell right there on Friday. You would have ended the day on Friday with actually you'd have made 2,000 pips and then retraced, and now you're at 1,700 pips. So those of you who are in the sell already, now is not the time to really, panic or to jump out, whatever. Just be mindful as to what the market is doing. Trade cautiously, trade your points, trade your zigzag points, and you will be okay. But remember, the main move of the market is bullish. That's the trend. So the sells that you take are going to be retracement sells. They may be hard retracements like they were last week, but just remember, they don't last forever. They're retracement trends. Take your exits and then look for your buying opportunities. So thank you again for watching. I know this video is a little bit long, but I just wanted to actually put that out there. But always practice, guys. Always practice. Trading is easy, but it's hard work to learn to be consistent. All right. And consistency only comes through practice and by determination. All right. So do what you have to do to focus, zone out the noise like I do sometimes. Just focus, just practice your theories, always back test. Don't be afraid to try new ideas. And please, please use a demo account until you are able to be confident enough to take your trades and watch them play out. All right. People always say to me, oh, I don't like practicing on demo, because it's not real and everything. Well, my thing is, okay, here's my challenge. Trade for 1 month on demo. If you can double your account, make 100% on your account in 1 month, then guess what? You can go live. If you can't do it on demo, it means you're not going to do it on live. You're just going to be throwing away your money. All right. So that's my advice to you. So thank you again, guys, for watching. And God, we just thank you again for this opportunity to review and to analyze We pray that you'll be with each of us this week. Help us to have a successful week, the best week of our trading lives. We thank you, we pray. Amen. All right, guys, see you next time and happy trading this week.